So Leo, we are going to present a new series that is going to be called the A Setup series. And in this series, we are going to cover all the 100%, so I can say the 90% probability setups that I normally use and play a lot. And most of people have been requesting for that. That is why I've decided to make this series. And in this series, we are going to be focusing on these A setups, on how to trade them, and also on how we are going to keep on progressing with them each and every single day, because we are day traders. We swing unless necessary. So there are setups that regularly appear in the market, and during their regularity, it means that they're giving us assurance of what is going to happen next, which is also going to be one of the basic facts that is going to make us reduce our risk and increase our reward. And that is why we're here. So basically, we're increasing our reward by lowering our risk with the setups that normally appear. Okay. Um, we are going to speak of mainly two A setups for the start, and we are going to make practice on them. The first A setup that we are going to be focusing on is the swing point price appearance. That is the first one we're going to be focused on. And with the logic that you're going to be considering the swing point price appearance is the logic behind market structure, candlestick anatomy, and time frame coordination. So uh, these are the three basic factors that you are going to be considering when taking the swing price appearance. So I know it is going to be a lot to think in sometimes, and it is going to be a lot of concepts to sing in sometimes too. But yeah, the more the concepts, the better the confluence, the higher the reward, the lower the risk. And the second A setup that you're going to be looking for is the sign of weakness. Okay, and with the sign of weakness, we are going to be considering also specifically time frame coordination in relation to FTAs. So there's only two concepts that are going to be considering with the sign of weakness. We're going to consider time frame coordination with FTA. So speaking of swing point price appearance, what is a swing point price appearance? Okay. A swing point price appearance, as it says itself, is the point in the market, okay, where we expect to get a swing of the market. And when you speak of swinging of the market, we are not speaking of 1 hour, 2 hours, 3 hours, 15 minutes. We are speaking of something very, very crucial, something that is either going to break the market structure or is going to create a new market structure sometimes later. Because with swing price appearance, it starts as the market leaving area of liquidity, going towards the break of market structure or the shift of market structure. Then the area of liquidity that was left behind comes and gets tested again. Okay, so speaking of structure-wise, it is something like this. Swing point price appearance is something that occurs in such kind of a market trend. Okay, so by the time we're here, we get a swing point price appearance. Okay. Right at this point here. And whenever we get this swing point price appearance, it means that we are probably sure of sweeping this level above here or even closing above. So with the swing point price appearance, it does not matter where it happens, we're obviously going to break the previous structure. No matter the liquidation process, no matter the noise, this has already given us a confirmation that we are going to break this point here. And I think with this concept, a lot of people are going to understand why most of their trade setups don't hit their taking profit, but instead they just go around and around and around like that. people will understand why they come into certain situations of the market like this, whereby they expect for the market on a bearish momentum. They expect for the market to come and test this level, come down here, or at least focus on buys or sell from this point here. Then instead, the market just shoots above. Most people don't understand why this appears. And on top of that, we are going to have a bonus setup. We are going to have a bonus setup. Okay. So unless you are a rookie, you're not supposed to be here. Okay. Anyway, uh, leave alone the blah, blah, blah. So, as we get to the chart, what I'm going to teach you is you should either take it as it is or leave it here, because the moment you start doing your own thing, I won't be there to blame. You have done your own shit. Now, let us look at these two things that we're going to be looking at in deep, under explanations and experience, and also practically. Okay. Now, we are going to be focusing on two things, as we've said. We are going to be focusing on swing point price appearance. Okay. We are going to also be focusing on sign of weakness. Okay. Now, we've already spoken of swing point price appearance, which has already given us a bonus, a bonus setup. Someone remind me for that. And looking at the sign of weakness, this is the moment where the market has failed to close below or above. So this is just a simple logic of the market is on a bullish, let's say, or yeah, it is on a bullish trend, and we're expecting for the market to close above this level, but the market fails. They just give us a wick. This is what we are calling the sign of weakness. Okay, because it either implies that the market is not going to push again on a bullish momentum, we're starting to look for a bearish momentum, or this area is not liquidate enough to push us and break this level, meaning that you are going to be looking for a level below here. Wow, this shit is fantastic. Okay, let us get it deep into this now. Listen to me closer. I'm going to repeat this once more. We are speaking of the sign of weakness, and when we speak of sign of weakness, this is what we mean. Okay, we are taking consideration of a bullish momentum. A bullish momentum. That is what we are going to be focusing on currently as an our example to focus on. Now, this is the trend itself, the bullish momentum itself. Okay, and we've said with the sign of weakness, we are concerned with time frame coordination in relation to FTAs, because time frame coordination gives us the first troubled area. Okay, and we are also going to be focusing on candlesticks anatomy. Apologies for the mistake earlier. Now, digging deep into this, there are moments where you find that the market is on a straight bullish, and to your expectation, this is the previous candle. This is the previous candle closer and opening. Okay, and the next candle coming, because it is a bullish momentum, we obviously expect for the market to come and close above this level, which is going to imply that we are still pushing on a bullish. Okay, now let us look into this scenario. There are times when the market doesn't really close above that level. Okay, but it tells us something. It gives us a different scenario. It just gives us a sweep like that. Okay, now when the market gives us a sweep like that, this implies that either we are not going to push bullish for the moment, or this candlestick is not strong enough to hold liquidities. Okay, that is where I said that during the previous example, this candle is not liquidate enough to provide us the power to push and close above here. Meaning that based on that scenario, if we are not going to push on the bullish momentum, that means we are going to drift into bearish with just a single candlestick presentation. Tayari tunakuwa tunajua kwamba soko limeshindwa kufunga above. Kwa hiyo tunachotegemea ni soko kuja kupush to the bearish momentum, kuja kufunga au kuja kuseli chini. Okay, in translation to those who did not understand, what I mean is that the market, based on this candlestick presentation, has failed to close above. So what we are to expect are two things: either for the market to come and collect liquidities below and buy again, or the market has already made its transition. We are no longer buying, we are selling. Okay, so this is what we are basically going to focus on, the sign of weakness. Okay, and tuning back to swing post price appearance, what we meant is that we have these kind of levels where the market is on a bullish momentum like this. Then all of a sudden, okay, it's not suddenly because we already know what the price is doing. Then it happens that we are right over here. Now, at this point, what most people expect is that even if we get a reversal, they will be expecting for the market to come and tap an area somewhere here, tap again here, create a new formation, shift with formation. The market doesn't always make something like this. The market is complicated, okay? As much as you understand the logics behind the market is as much as you must understand the manipulation behind the market. Kama una strategy yako SMC sijui whatever, inamaanisha unaelewa mchakato wa soko. Lakini je, soko linafanya manipulation kivipi? Kwamba yes, nilikuwa natakiwa ni buy hapa, lakini kulingana na soko lilichokiongea sasa hivi I have to wait pips 10 juu ndio niingie. In translation to that, what I meant is that you have to understand the logics behind your trading strategy. After you understand the logics behind your trading strategy, you must understand the manipulation of the market. That is basically what was said in the mother tongue. To those who did not understand, I've made it simple for you. Now, let us dig deep into this. Now, with the swing post price appearance, that is not what you should be expecting. With the swing post price appearance, what you should be expecting is 100% probability of the market coming to break this level here. So you won't have doubts of the levels that are left inside here because they won't matter. Why won't they matter? Because the market has given us a swing point price appearance. And the swing point price appearance has its own condition in order to be applied in the market. It is simple. You have to consider the candlestick's anatomy. It is simple. You have to consider time frame coordination. Simple. Understand the liquidation process. These three things are going to give you swing point price appearance. Now, why did I decide to teach you these two things together? Because with the swing post price appearance, we are sure of the market coming to test the level below. Now, it is upon them to either close below or do not close below. Because if they close below, we are going to be sure of taking a continuation on a bullish, then a sell. Okay? But if they do not close below, that means they have given us a sign of weakness. They've just come and collected liquidity below. Boom, we are back up. And the reason why I'm focusing on this, it is because a lot of people have been facing this kind of issue whereby they expect for the market to come and test this level here for them to take their buys, but instead the market sweeps. Then after the market sweeping, they expect for the market to come and test this level and continue on a bearish momentum, or come at this level and continue on a bearish momentum, but boom, umetobolewa, utajua ujui. Soma. Now, how do we solve this issue? This is not my homework for the day. This is your own shit to take a look at. Now, what I'm supposed to be teaching you today is the swing price appearance and sign of weakness. Let us get to the charts and see what this happens. 2017, I joined the team, yeah. 9 to 5, fucking I don't need. I'm a forex trader. Please don't ask me where my G's at. I'm a forex trader. I'm a forex trader. I'm a forex trader, yeah. I'm a forex trader. Nigga, see you later. Nigga, see you later. Nigga, see you later, yeah. So, with the swing post price appearance, okay, we are going to be focusing on this setup that we traded 2 weeks ago. Is it 2 weeks? 2 weeks. Friday 29th August. This is September 29th, a month ago. Okay, so this was a perfect setup for a swing post price appearance, but also this was a perfect setup that was created specifically by sign of weakness. Yani, swing point price appearance ilitokea, sawa, lakini ikaja ikawa powered by sign of weakness. Okay, what I meant was swing point price appearance has occurred, but also sign of weakness has given us a confirmation and a re-entry to our entry. Damn. A re-entry to your entry. That English is perfect. Now, looking at the daily, okay, look at this level here. Oh, look at this level here. Okay. We're just focusing on the candlesticks anatomy, as we say, because if we take a very good look, we do not need to go to the weekly. We do not need to go to the monthly. This is just something that ta bandika bandua umeondoka, withdraw. Simple. You deposit, you trade, you withdraw. Simple. You don't have to wait for blah 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 next week, next month. This is something you wanna. This is where people flip. So if you keep a keen ear, you are going to flip. Now, if you take a closer look, you'll notice that we had a very good closure above here. Okay. Now, as a guru, I have the ability to trade this sell and also trade this buy because I buy when I'm supposed to sell. Okay, what I mean is whenever I see bullish liquidities, it means I'm supposed to sell. So I sell towards the liquidity. And whenever I see bearish liquidities, okay, apologies. Whenever I see bullish liquidities, I buy towards the liquidity. Whenever I see bearish liquidities, I sell towards the liquidity because I am supposed to be buying, I'm supposed to be buying low and selling high. Okay, I'm supposed to be selling at this point high and I'm supposed to be buying at this point low. That is basically what that word means. Okay, tuachane na hizo kelele. Oh, now looking at the swing points price appearance. Okay, why do I consider this as a swing points price appearance? Because I have a pin bar, a very perfect pin bar, and for me to consider this as a pin bar, it means that I have to wait for the market and thrust above and close above. So if you take a closer look, you'll see that I have this pin bar and the market did give me a thrust move and closed above. Kwamba nina pin bar kutoka kwa kile kitabu cha yule mzee, mheshima yule mzee, kasomeni. Amenipa pin bar. Baada ya kupewa pin bar, na hakikishaje kwamba hii ni pin bar? Pale ambapo ninakuta ile wiki ya kwanza iliyojinyonya yenye body ndogo na wicks kubwa, natakiwa kendo inayofuatia nikute ine thrust juu. In English, what I meant is whenever I find a candle with a very tiny body and a longer wick, in order for me to consider that this area has liquidities enough that need to come later, it means that the following candle has to close above or below, depending on the structure, has to close above on a bullish momentum with a thrust candle strongly, or has to close below with a thrust move on a bearish structure strongly. That is in case you're focusing on a bearish structure. But as to our price, we are focusing on a bullish structure. Now, the second thing is, where have you seen the swing points price appearance? Umeona wapi setup yako? Because it does not matter. Someone might have seen it on a daily, someone might have seen it on a 4 hour, someone might have seen it on a 1 hour. It does not matter because we differ in experience, we differ in time frame considerations because I call the 1 hour a lower time frame. Somebody calls the 1 hour a very higher time frame. So cool. Okay. Now, I've seen it on a daily, meaning that under normal time frame coordination affirmations, okay? Under normal time frame coordination affirmations, it means that all the daily structures are formed by the 1 hour because daily is my constant, 1 hour is situational. Believe it or not, accept it or not, that is how the time frame works. Utajua wewe. Now, if we get to the 1 hour time frame, it means that our structure is on a daily. Getting to the 1 hour time frame, it means that we are going to start and looking at the liquidation. Now, as a guru, I can say that based on candlestick presentation, it is below here, but you'll get lost. You are not yet a guru. Let us get to the 1 hour and see the liquidation process. You have to go through the dirt, my friend. You have to go through it all. Now, if we take at the 1 hour time frame, look, what do we see? We can see that the break of market structure was right at this point here. And at the break of market structure, it was formed. A new formation was also formed. After the market broke this level, a new formation was also formed right over here. After this formation was formed, let us go to the 1 hour just to confirm we are not looking at something else in the 4 hours other than that. And when we go to the 4 hours time frame, we notice that this area has already been liquidated. All of it, there's nothing that has remained. Why? Look at the balance of liquidities between the wicks, the body. Nothing is left except for one thing. We have an imbalance down here. Right upper. You see? This imbalance. This is the gap you're looking for. This is where they forgot their liquidities. This is where you unapiga lot. You see? This is where unapiga lot, my friend. Because this is where you tundika lot. Why? Because if you go to a lower time frame, the 15, there is always something that is left behind, the untested 100%. This one. 100% this area is always left behind. Why is it left behind? Because this is the liquidity itself that started pushing everything. This is the thing that started the whole push. Now, let us finish with the 5 minutes to lower the risk. If we come with the 5 minutes to lower the risk, you will notice that, okay? Everything is down here. How many pips? 19 pips. Okay? And if we take a closer look with 5 minutes, we also have the balance of liquidities right at that point. So this is where you make wonders. This is exactly where you will make wonders. 10 pips stop loss. Ukiwa na dola 100, stop loss ya pips 10 inamaanisha dola 100 imekata. Okay? Kwa hiyo inamaanisha ukitunguka na 0.5, what is the return? Kwa sababu ukitunguka na 0.5 ukagusa stop loss, unakuwa umelose dola 50. Sawa? Lakini ukija ukichukua return hapo, sawa, unakuja kuchukua pips 100 ngapi? Pips 120. Narudia, I will also say this in English, but in Swahili, setup kama hii ni setup ambayo una stop loss ya pips 10. Unajua kwamba hii nina uhakika Deriki alinifundisha, ukigonga stop loss nitafute nikurudishie mamala yako. Pips 10 una deposit 100. Tuongelee kwa wale ambao hawana mitaji. Deposit 100 ukatrade kwa lot size ya 1, broker hizi kukatalia. Kwa hiyo ukitrade ikagusa stop loss kwa lot size ya 1, unamaanisha unakuwa umelose dola 100. That is bullshit. Kwa hiyo inamaanisha unatunguka na 0.5. You risk half of the capital. Ukitunguka na 0.5 with just this one move 128 pips, una dola 770. What I was saying is, with this kind of a setup, you have $100 deposit. What you have to do is just wait for the market to come inside here. 10 pips stop loss. 0.5 lot size. In case of stop loss, 50 pips. But why stop loss? No stop loss, because I've said so. Okay? So it is as simple as that. Otherwise, in case you are left behind, you wait for the market to come, because this is the daily area of liquidity. It means that once the market taps that level, 1 hour shift is enough for you to do whatever has to be done. Okay? So as I told you, I have the ability to trade and come below here because I'm the guru, but I won't be focusing on that. Let us see what really happened. You see, it was as simple as that. Wouldn't have missed that one, I'm pretty sure. Okay? Na tulisema kwamba this is the daily, this setup that we are trading was a daily, meaning that its liquidation was starting on a 1 hour time frame. And if you take a closer look at the 1 hour time frame, take a closer look at the 1 hour time frame, we did not have anything in particular at first, which is very, very much okay. But they also gave us another swing price appearance with the formation, and it was untested level. Kwa sababu, after this formation was given, okay, this is the pin bar. The same thing that we've traded on a daily down here. It is the same thing here. Look at this. Let me show you. Trended daily. Look at this candlestick pattern hapa tulioanza nayo at this point here. Aya. Let us go to the 1 hour. The same thing finally happened again. Trust candle with the formation. So what was left was really nothing to do other than buying straight from the bottom. 15 minutes entry. 5 minutes. It was all here, my brother. It was all here. Stop loss, very, very, very tight. Very, very tight stop loss. 7, 8, 9, 10. See? Stop loss was a tight one. To those who are afraid, they could have just placed it below here because it was a 15 or something. Okay, so this is basically how you're supposed to be doing it each and every single time. You see swing point price appearance. And what is a swing point price? What is a swing point price appearance? It is what I have told you. Kwa sababu gani? Why am I saying so? Imagine up to this point here. You are sure this is a swing point price appearance. They must break this level. 0.5 for the first time, 0.5 for the second time. 128 pips.